Good morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. The national government's debt rose to a new record high of 10.77 trillion pesos as of the end of March. Now, data from the Bureau of Treasury showed that the debt stock was 27% higher from the amount of over 8.47 trillion pesos recorded during the same period of last year, and up by 3.5% month on month from February's 10.4 trillion pesos. The Treasury said the increase in debt was mainly due to the 5% month-on-month growth in domestic debt to over 7.74 trillion pesos. That's after it raised nearly 412 billion pesos from the sale of Treasury bonds on March 4th. Now, overall, local debt took 72% of the total, while the remaining 28% came from foreign sources. RCBC Chief Economist Mike Ricafort said the sustained rise in debt stock was due to the widening budget deficit, as the government has the increased borrowings to make up for low revenues and to ramp up spending. Excuse me. Ricafort said tighter restrictions in Metro Manila and nearby provinces could result in wider deficits and more borrowings that could lead to higher debt due to reduced tax collections. Now, NEDA says Metro Manila needs to downgrade to GCQ this May, citing the region's large contribution to the economy. NEDA Director General Carl Kendrick Chua said NCR has to move out of MECQ within this month because activity in the metro accounts for about 42% of the services sector and more than 20% of the country's industrial sector. Malacanang yesterday maintained that quarantine restrictions in the NCR Plus may be relaxed this month. That's if the COVID-19 reproduction number continues to go down and if healthcare capacity improves. But Chua says the government must also do its part in improving its prevention, detection, isolation, treatment, and recovery strategy, or PDITR, to bring down COVID-19 rates in the region. To contribute to this, Chua said NEDA is working with LGUs and government agencies to automate contact tracing systems in order to cut the detection period from 7 to 5 days, potentially slashing the number of new daily cases to half. Chua reiterated that the government's focus must be on the safe reopening of the economy. He is also advocating for the fast rollout of vaccines to reduce transmission rates and allow economic reopening as soon as possible. Okay, guys, kicking off with the market opening here in the domestic front. You can see our index up by 0.4%, really inching our way back towards those 6,400 levels here. Let's take a quick peek at the leaders and laggards of this morning's trade. The first 3 minutes in URC, the best performer so far, up by 1 and 14%. You have just a few actually sitting out this rally, including GD Capital, Mega World, and Emperador. Now, we'll let markets percolate. But meanwhile, I do want to take a quick peek at the biggest focus right now, which are, of course, the malls and the restaurants. On the everyone waiting for on bated breath on whether or not the government will be easing those restrictions come mid-May. This from the Philippine Retailers Association. They had actually now dimmed, let's say, their recovery outlook for the retailers this year. So in January, they had projected a 10% growth this year compared to 2020. That was, however, still 20 to 30% lower than the pre-pandemic levels. But now, I quote the PRA Vice Chairman Roberto Claudio. He says, all bets are off now for any growth from 2020. At best, it will be flat for 2021. And they now say that this moves their estimates of recovery to the second half of this year if we do revert to GCQ or MGCQ on May 14. And if that does not happen, the recovery might be looking like it will come in 2022 pa, especially among retailers retailers and restaurants. But you can see here SM Prime, however, still staging a comeback this morning. That's up by 0.3%. Not everything, however, is lost for the property sector. I did mention SM Prime. They have said that their first quarter home sales rose by 31% despite the pandemic. This is their reservation sales. That is amounting to 32.4 billion pesos. Now recall that yesterday they had reported their first quarter net income rising 80% from the previous quarter, with the retail outlets actually improving 10% quarter on quarter. Now they did mention that the new projects in Metro Manila was 2/3 of the reservation sales. They're looking to launch as many as 20,000 residential units this year. Now, still on the property space, this according to the PSE, they're actually looking to exempt some of the REIT shares from a lock-up. Now, what are they meaning here? Now, of course, you have the same listing rules the REITs are subjected to. Whenever you buy shares and you've bought it and paid it at a price that was lower than the offer or listing price 180 days before that offering period, you cannot sell that for 365 days. And they are saying that they would like to exempt those that are selling to the sponsor company from the existing lock-up rules. The PSE is saying that as long as these were not issued earlier than the 180-day period, they will be able to exempt this from the lock-up rules. They say that these changes will allow the sponsors to sell these exempted shares during the IPO to help them also achieve the MPO, or the minimum public float requirement. But you can see the property index here up by 0.12% this morning. All bets are off. This seems to be the tone for many people when they are asked for this year's outlook. And here to weigh in on the latest developments, we have with us Benedicto Yujuico, President of the Philippine Chamber of Commerce and Industry. Good morning, sir, and welcome to the broadcast.
Thank you. Good morning as well.
Sir, let's kick off with the current restrictions here in the country and what you think might be happening. NEDA is now pushing for GCQ or MECQ after May 14. What would be the impact on businesses for every week that we are extending these restrictions? Is there really going to be an immediate impact, especially since consumer confidence is still quite low?
Well, yes. Actually, if you remember, early April, NEDA said that the extended lockdown in Metro Manila and 4 provinces would prevent 215 new COVID cases, but render at least 350,000 Filipinos jobless or poorer. NEDA estimated that the 2-week ECQ would shave off 0.8 percentage points from economic growth this year, equivalent to 30 billion. And 102,000 more Filipinos would fall into poverty. That is what is happening. There's a trade-off, really, and NEDA has tried to quantify it. You know, as you try to prevent the infections, you also are affecting or creating more Filipinos jobless. In fact, if you use the NEDA figures, more than two COVID cases prevented equals 3.5 jobs lost.
Mm-hmm. All right. So, sir, what should be the position of the PCCI here? Can you actually give a recommendation whether we can now reopen safely? What metrics are you looking at? Are you looking at the number of cases, the reproduction rate, to say that now's the time that we have to tilt the risks towards reopening the economy?
Well, we have to reopen. That's for us. Our position is we have to do that. But we have to reopen in a manner where we are able to comply fully with all of the safeguards. Otherwise, if we open and if we are careless about it, we might end up like what is happening in other countries, in particular India. So the balance is very delicate here. On one hand, we see community pantries sprouting all over the Philippines. And this is a consequence of people being jobless and people not having enough to eat. On the other hand, we also see the rates of infection at a high. And recently, it has been moving down, but not sufficient enough. The PCCI actually feels that the true not solution. What will significantly help is the start of serious vaccination efforts in Metro Manila and all over the country. That will prevent serious illness, hospitalization, and death. That is what we are hoping for. In the meantime, we need to open the business, but we need to do it carefully.
Sir, can you comment on the current pace of vaccination? Do you think that the government has done its part and is really doing its best, or can there be a bigger role for the private sector to play? And if so, what role should this be?
Well, I have always asked the IATF to allow private sector to import vaccines without a lot of the requirements, except, of course, the requirement that the government will have to guarantee that we will not sue the suppliers. So I think the government has tried. I think in retrospect, certain things could have done earlier, but that's water under the bridge. I think PCCI, what we want to see now is an effective distribution and implementation of inoculation now that the vaccines have started to arrive, particularly vaccines from China and vaccines from Russia. We just have to do it very effectively and as quickly as we can.
Sir, are you still pushing through with plans to import vaccines? As it was announced before that the private sector could, but as you mentioned, there still needs to be a tripartite agreement. Do you have specific plans for this?
Yes, except that the supply has now become extremely tight. For instance, we were looking at India as a possible supplier of vaccines. And I have spoken to the local agents of Bharat. Bharat is one of the largest vaccine manufacturers. But now, look at what is happening in India. They cannot export anymore
Okay.
because they have their own big problems over there.
Okay, so the bottleneck is on the supply side and not necessarily on your willingness to import. Sir, let's talk about government aid and whether you feel that that the way that they've managed their fiscal discipline for the government is actually prudent, or whether you feel that more aid is needed for the members of the PCCI, especially the hardest hit industries.
Well, the government is trying to balance our future funding requirements with the current needs. We could ask Department of Finance to accelerate the spending, but then again, assuming that this COVID will be with us for another year or two, we might actually run out of money for whatever necessities that we need. It's only the United States that can actually print money as needed, as you know. Other countries, but us Philippines, we have to be prudent on one hand, and we have to choose very carefully how we will deploy our resources.
Sir, what's your sentiment? Of course, you were mentioning that the vaccination rollout is crucial to reopening the economy, but just for the data on the economic front that we've been receiving so far, we've had certain outlook or downgrades when it comes to the growth outlook from ADB, the likes of ADB. We've got Nomura as well. So what is your outlook on the economy now? Is it going to be better than 2020, or with this new wave of cases, is there much more risks to the downside?
Well, I hope it will be better than 2020, but I actually am also quite pragmatic about this. The way we have performed, the way the economy has performed for the past 4 months, surely is not going to be in the positive side. And for us, if we think we can still grow 6% for the rest of the year, we have to grow 12%. And I don't know how realistic it is for us to be able to grow 12% for the second semester of 2021. So I think that we have to adjust our expectations for 2021. I think the current expectations of 6 to 7.5% growth might be too optimistic. I think we have to actually take a more conservative approach, and we'll probably see 3 to 4%. I hope better, but that is what we hope to achieve.
Sir, are you seeing increased agility within the members of the chamber when it comes to digitalization, pivot, their ability to create new types of businesses that are adapted to the new normal, so to speak, and the capitalization that the banks still have and the liquidity that's still available for them to tap to help them go through and to manage the amount of jobs lost?
Yes, actually, when people try to survive, they become very, very imaginative. They try whatever it is that they can do in order to survive or even prosper. So, one of the things that PCCI has been pushing is innovation. And we actually have started to a learning program in cloud AI and digital platform to help our MSMEs reach this level so that they can actually do what they are not able to achieve before, which is to reach their customers in a different way. For example, a lot of the restaurants now, they have learned how to do a delivery business. They've learned how to work with Grab and other delivery, and because that adds a lot of revenue to their base. So there are many other things. Also, the other thing that we are also encouraging government is let's promote local products. That's one of the things that will help the economy, not only the MSMEs, but also the big companies. I have been pushing very, very hard for infrastructure products like steel, cement, and other construction materials. Let's give preference to local manufacturers. It is, for me, absolutely crazy for us to import materials, give jobs to other countries, and then use those materials in our infrastructure projects when we, in fact, can actually generate more jobs if we buy local.
Okay, so as you mentioned here, still being realistic, you did mention 3 to 4% the expectation of growth this year, but of course, with the increased vaccination drive and hopefully with businesses continuing to find more creative and agile solutions, hopefully we will stay afloat. Thank you so much for those insights. That was, of course, Benedicto Yujuico, President of the PCCI.
Okay, thank you too.
Here are the other headlines we're keeping our eyes on. NEDA says the national ID program will play a big role in the country's pandemic response and recovery, especially in the distribution of social amelioration. Director General Carl Kendrick Chua explained that there are three main objectives for the rollout of the national ID. First is financial inclusion, which is why Land Bank is co-locating in all physical registration sites to assist the unbanked Filipinos get a free MasterCard prepaid card. Second is convenient COVID-19 vaccination for Priority C, or the general population. Chua says having a centralized ID database will help the government queue and register the general population for vaccination. And finally, Chua says PhilSys ID holders will no longer have to line up for ayuda or social amelioration, as they can simply receive and withdraw aid from their prepaid cards. Chua also apologized for the technical glitches hampering the online PhilSys registration and said they are already working with the IT experts to improve the registration site's user capacity. Analysts say the contraction in last month's PMI manufacturing index does not bode well for the country's recovery prospects, with some saying the worst is yet to come. ING senior economist Nikki Mapu says the gloomy factory figures, while largely expected, signals that the country's recovery prospects remain fragile. April PMI clocked in at 49 in April from 52.2 in March, marking a contraction in operating conditions across the sector. Mapa says this drop is the steepest on record, even more dramatic compared to last year's plunge at the height of the pandemic. And for the month of May, RCBC chief economist Mike Ricafort says the manufacturing PMI will likely contract further, with COVID cases still elevated, prompting the extension of MECQ in NCR. Oxford Economics adds that while manufacturing activity picked up in most Asian economies in April, tighter mobility restrictions is dimming the outlook for the Philippines, India, and Thailand. And that's a first look into the business day. Today's Tuesday, May 4th, 2021. Catch Businessworld live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.